Glassratner Advisory and Capital Group, LLC. Seth, great having you. This is Harsh here. Let me first start off by getting a setup from you. How are you viewing the macros in the US versus the kind of rally that we've seen in US markets? How are you visualizing all of this, and how is it likely to play out over the next 12 months?
Well, based on what the market's done the last few days, and today in particular, their sentiment is strong. There's just been so much market upheaval over this past year between the dollar dropping, oil prices, gold and silver rising, that this is just a setup for some uncertainty going into the new year. The Fed has indicated that we might just stick at this most recent 75 basis point reduction this year. But depending on how employment looks in the United States in particular, there may be some room for further reductions. And that's going to keep driving market prices up.
Hi, morning, Seth. How do you see, the markets going into the new year? We've seen gold again inching up to a new high. It seems that the investors are seeing risk, and that's why they are loading up on gold going into the new year. What is the kind of risk that you see coming, hitting the markets early 2026?
I think the biggest risk is some surprise underperformance or slow growth in the AI sector. A lot of this has been driven by the biggest seven stocks, for example, in the S&P 500. Although today we saw that there was broader gains, not just the top seven. But what's happening is we have AI companies investing in the hardware companies that are in turn dependent on sales and revenue from the AI companies. So this cross ownership and cross credit relationships could create a real crisis should one or two of these companies have much lower projections than we're looking at today.
Seth, I mean, what has 2025 sort of hinted at a time when you've had most asset classes go up and they continue to do so, be it US equities, be it some other regional markets, and then, of course, what's happening in asset classes like gold and silver, which continue to notch record highs on a daily basis? Quite unique.
I think what's unique is how much liquidity there is, that money can get tied up in gold, and gold doesn't pay any dividends. We have a lot of money pouring into shares. We have people getting big profits in bonds because interest rates have gone down. So I think the big surprise is all of this liquidity. The negative surprise is in private credit, corporate credit, and credit funds. And we can see a lot of problems with underwriting, and we have a big wall of debt coming in this coming year in 2026 that I think is going to surprise investors, and we're going to see many companies seeking restructuring. Their lenders are going to need to restructure, and we're going to see some other blow-ups.
Interesting. Okay, Seth, we'll let you go on that note. Thanks, as always, for taking the time out.
Thank you.
Okay, let's focus on our markets. While, of course, ACC Ambuja amalgamation